Hey Sharks, welcome back. Happy Monday. Today is December 8th, first week of December. Okay, I wish everyone is doing well and enjoying are in the holiday spirits. And yeah, so we are first week in December. Generally, December the volume is less. Trading volume has less trading volume, but it's okay. Today I made a trade. It's a spread trade because I see an opportunity in gold. And every now and then, when I see an opportunity, especially gold, I would like to take advantage of that. So I did a call credit spread. Okay, call credit spread is a advanced strategy. This is more of a bearish strategy because I see there's a specific resistance based off the technicals on gold. So I'll kind of walk you guys through what I did and what I see, and you guys can learn from that or make this trade if you catch it in time. But either way, let's take a look at it together. So I'm looking at a 1 month chart of gold, GLD. As you can see, there is clear signs of resistance levels, really strong at the 390 range. Same thing here, 390. So double tops on this side. Uh, and let's look at the 3 month. There was one point it broke over 400, but it quickly sold off. All right, but the main resistance you can see from the 1 month is the 390. So based off that, I decided to enter a spread trade because it's trading near that zone or where it makes the premium makes sense, right? The premium is reasonable. So I executed the trade doing a call credit spread, and the strike prices that I selected is a 392 and a 399. I did a 10 contracts uh, at a credit of $71 per contract, as you can see here. And then 10 contracts over here. Did this today. Today's December 8th. Collected about $710. So very nice. Okay. So this is a call credit spread. And what this means is I'm essentially saying that gold is not going to break past 392. It's going to stay below 392. So as long as gold stays trading below 392 at the day of expiration, then I will be able to realize the full amount of the $710. Okay. And if you want to go deeper into understanding how all these numbers work, the market value and all that, I provide one-on-one coaching in my community so I can teach you and share with you how to look at the numbers, how to read the numbers, and understand the performance of your contracts. Okay. But obviously, I saw an opportunity and I took advantage of that and was able to open a trade to get a premium of 710. Of course, the contracts are still open until they close. Then I would be able to determine how much of this I will be able to realize. So that's that play for gold, which I executed. There's two other plays that I saw today that I recommended to my other member, and you guys can see here. I have a WhatsApp group. This is our Monday session. Every Monday we do group coaching. So I provide a summary of what we talked about in the group coaching session, as you guys can see. And then I gave some trades to one of my members. His name is Mr. Abraham. And we went over a few ticker symbols like Nvidia, CoreWeave, Marvell, VRT, A-Lab. So I gave him some strike prices to go. He was originally thinking about doing hood, but it's a little bit too aggressive based off the strike prices that he picked. So I gave him some recommendations. And let's just look at two, the Nvidia, and look at CRWV. So Nvidia is trading pretty much sideways. It has a lot of headwinds because of the market and competition from the market. It's a very tough market they are in. Like you can see here's the 1 month. Pretty much it's a sideways action, so it's perfect to run the wheel strategy. And if you look at Nvidia in the 170s range, in the 170 range, that's the best place to sell puts. So and also strong resistance at the 190. There you go, the 192. So the 190s resistance support in the 170s. So if you get sell and put at a 175 and below, you'll do really well. And you can also turn it into a put credit spread if you don't have the collateral, the capital to sell a put, because obviously if you sell a put at 175, the collateral needed is 17,500. So let's take a look at it together. Sell put, right? Looking at the 175 strike, It's paying about $73 per contract, so it's very nice. And then we turn this into a spread trade, and I like to go 7 points. Some people can go five. The wider the leg, the wider the spread, the more risk you're taking. The smaller the spread, uh, then the less risk you are taking. So let's take a look at 167 and a half, or even 170 is fine. And you can see it's paying about $44 per contract. So it's very conservative. Okay, obviously in the morning, these numbers will look a little bit better. They're more juicy. But this is what you would do if you want to do a trade where you don't want to have to use all of your collateral, because selling a put, it requires a lot more capital, right? So in this case, you could do a spread trade, and you'll just be using at this moment a 5 point spread, about 456 collateral. So you can shows here 455, 456, and pays about $45. And if you could do 10 contracts, you'll be using about 4,500 in collateral, make 450 bucks. It's about 10%. Really nice. And it's a very safe trade. We can go back to looking at the 175, the put, and see what the delta looks like here. So you can see the delta is 14. It's very, very low delta, 14 delta. So it's a very safe trade. So this is a very good play, okay, to run on Nvidia, because it's trading sideways, strong resistance levels, strong support levels. Let's check out CoreWeave. CoreWeave just recently had a bit of a pullback because of some unfavorable news, and it kind of and it rebounded, right? So it rebounded. So CoreWeave is another stock that I would focus on. Same thing, you can see is trading sideways. Company's not profitable yet, but they have the backings of giants. They have the backings of Nvidia. So I am not concerned about this company, and they're in the right industry. But as you can see, it's trading around 84. So support level, major support level, 65. But let's look at this support. There's 69, 71, 75. So I would say anything between 71 and 75 is a good level to run puts. So let's just take a look at a 75 strike. $58 per contract. Not bad. Not bad. All right. And same thing is 12 delta. But we can go a little bit higher. Go to 15 delta to be safe. Right. And then you can just run a cash secure. But this way, collaterals needed is 7,600 because it's a 76 strike. If you don't have the capital, let's turn that into a put credit spread and go 5 points. And you can buy a put at 71. There you go. And you'll get paid about $44 per contract. The collateral need is about 447. So let's say you run 10 contracts. The collateral will be 4,470 to make 530. So it's very nice, and it's very safe, low delta. Uh, and if you want to understand more about how delta works and everything else, I can definitely help you there. But yeah, this will be another play that you can run that I would recommend. And I'm just kind of showing you guys what to look for and how to look at it. All right, great. So if you found this video helpful on gold, on Nvidia and CoreWeave, on a put credit spread, or even understanding what to look for in a wheel strategy, support and resistance, definitely, if you want to get better at this, I coach my members on a one-on-one base. You guys can see here's my private group, Options Shark, and this is where my members are located, and we help each other with everything when it comes to markets and trading options. Yeah, and if you book a time with me, there's a link there in the description. You'll personally speak with me on a one-on-one base. I'll share my screen, give you a virtual tour, and then, yeah, see if we're a good fit or not. Other than that, stay tuned for the second half of the video. You'll see an actual coaching call that I do with one of my members. And then, yeah, I hope to see you guys and talk to you guys soon. And I'll see you on the next one. Bye-bye. Okay, let's look at the hood, 102, 125. That's pretty much in the money, very deep. You're gonna put at 136, you're at 125. So you're missing out on a lot of gains. In order to realize these gains, you're gonna have to roll that cover call up and out.
Okay.
125 is your strike. So let's take a look at it. Hood, 125 strike. Expiration, was it 102? January 2nd is your expiration. Strike is 125. Yeah, you're pretty buried in this cover call. Sell call. Let's go to March. Let's see. Yeah, only in March you can roll it up 4 points to 140. You can roll it up from 125 to 140 and collect a credit.
How much is the credit?
I'll say 140 is good because it's about $200 per contract. No, $110 per contract.
Well, that's all the way in March, though, huh?
Yeah, but you can just let it expire at that 140 or
Okay.
yeah. So that's the only way you can roll for a credit. You can roll for a break even, and we can look at February. Let's see, 17. No, February. You could roll a 135 strike for February. February 20th, 135 strike. They'll give you a $45 credit. It's still in the money, but only $1.70 difference. $1 difference.
Okay. So I'm getting that's a net credit for 22.56.
If you go with the 220, 135, you get a credit of $45.
Okay. But I got like 17 of those.
Which the spread is
They go
pretty
for that
wide,
then
so you can
go
spread is
mid.
pretty wide. You can go
Yeah.
with let's try 1.20. Yeah, 1.20. The price 1.20, yeah. There you go. So collect 1920 there and move it up 15 points. Yeah,
Filled.
I feel. Yep. All right. You want to refresh? Oh, no, that hood's already done there. AMKR, that leap is doing really good. You're up 4,000 on that. 4,700 to be exact. And good thing you didn't run a cover
Sorry,
call
my
on it,
phone's going
Joe.
off. What was that? AMKR?
Yeah, you're up 4,700, about 4,800 there. That's a very good leap. Almost $5,000 profit.
Would you take it, or you think it's going to keep climbing?
Uh, it hasn't shown true resistance. It's just been going up and up. We want to know where that resistance is. It has not shown it. So I personally am holding on to it until I see a clear resistance from it. Actually,
Okay.
there's some resistance now about 43, 44. It has topped off around this area at 43, 40. So
I
you
mean, that's
can
a
take,
lot. That's a huge profit. How much more
yeah,
can it
you can
could
take
it go up
profit
even
there.
double?
You can take profit there. If you, I
Okay.
see resistance. But this is a resistance that happened just yesterday. The resistance was
Right.
actually formed yesterday. It's a very new resistance. Okay, but the
Okay.
industry they're in is very good because they are the ones that do the quality check on the chips. Their plant their plant is right next to TSMC, and TSMC sends all of their chips to AMKR for them to do the quality check.
Okay.
So
So
they
could
pretty
this go
much
up
go hand in hand.
300%? Is that possible?
Of course, it's possible. It's
Okay.
100% possible.
We'll just leave that alone then for right now.
Okay,
I think it's
CIFR, you have a 22 cover call to 19th. It's okay because it's trading at 19, so we don't need to worry about that. Your leap is doing just fine. We'll leave that alone. Calm, you're up
just let it
1,300
expire.
there. Yeah, Calm is not really doing much. I'll say I have Calm at I have an alert for myself to take profits at Calm when it's trading at 1950. 1950 is a resistance level. So once we get close to there, we're going to take profits. And then You have HIMS trading at 39. You have a 42.50 cover call, which is doing just fine. And then you have a leap. Yes, you have a leap, which is down a little bit, which is okay because you're selling cover calls to offset it. And then very, we just leave that alone. So yeah, overall everything looks good. Now we're fully updated and the portfolio is managed perfectly.
Perfect.
Okay.
Okay. And I don't have a lot of reserves right now, so I'd probably just keep holding that.
No, we'll just let things, let the, just leave, yeah. Well, you have reserve your capitals in your positions. You have a lot of profit. Like you're up 42,000 Robinhood.
Right.
Uh, you have a 220. Oh yeah, that's the cover call. But yeah, the only thing we need to do is take profits on AMKR soon and come. And then
Okay.
the rest are leaps. Go up a little bit, and then your iron needs to recover too. So iron 1,000 shares, only down 3,400, which is okay. Uh, let's see. Yeah, you're pretty much breaking even iron because your cover call net you about 2,200.
Yeah.
So you're really down like 1,300 on iron. So it's very pretty much nothing. Uh, hood. Yeah, you're just pretty much stuck in hood because of that cover call that made you stay in there. But we just select a strike price that we want to exit at. So I think if you want to exit at 135 with hood, then just leave it at this will be the last roll and just let it
Yeah, that
expire.
would be. I'd be
Yeah.
happy with that. I mean, it did get up to 150 at one point.
Yeah.
So
The
by the time
max,
we let it expire at 135, we'll see.
yeah, just know the max that you can collect with this roll because your strike's 135. So that means that you have to exit at 135 on February 20th. So that means your
So I
max
can't roll
profit.
again.
You can roll again. You absolutely can. But I'm saying if we were to let it get called away, your max profit is already telling you 43,000, about 43,
Right.
42,000. So from
That's
now
good. I
till
mean, we can
February
always get
20th,
back in.
of course. And we can just not
Yeah.
not just stick to this stock, but anyways, we'll see how that goes. If it goes parabolic to like 140, 150, then we may have to consider staying a little bit longer with this position. You get what
Right.
I mean? Okay.
And that's okay.
Um,
Yeah.
yeah, yeah. All right, cool, Rick. I have a full
Cool.
schedule today, so hope you could wish you be able to take care of the stuff you need to take care of. And then
Yeah.
anything comes up, just shoot
Absolutely.
me a message.
You got it, buddy. You have a good
Okay.
day.
All right,
All
buddy.
right.
Talk to you later.
Peace out.